Hi folks, welcome to today's The Steady Trader video. It is a Tuesday, which means it is time for a actionable trade idea. And as you'll see in a minute, this is a trade idea that's going to make some people very happy. It's going to make some people very angry. If you're going to be a hater about this, you really don't need to spread your hate in the comment section below. You can just go somewhere else, maybe go to the gym or something. Before we get to the trade idea though, we're planning our next workshop. These are the live 2.5-day sessions, and we're thinking Denver as the next location, but it's totally up in the air. Let us know in the comment section down below, or send us an email, support@thesteadytrader.com, where you would like one of the next locations to be. It doesn't have to be the very next one. Let us know what location you're at and you would like us to show up for a 2.5-day live in-person workshop. So having said that, the trade idea today is on Tesla, okay? And I'm going to say this again because every single time I talk about Tesla, we get a crazy amount of feedback, both positive and negative. I have, over the past 21 years as a trader, never seen a stock that has had a more polarized investor, or at least, I guess, investor and trader base. It is, the emotions in this stock are higher than in any stock I've ever seen. Higher than Apple, much higher than Apple, higher than anything I've ever seen. Amazon comes nothing compared to Tesla. I'm not really sure why, and I don't really care. It is what it is. But so this is going to set up for a trade. Now, again, keep in mind, if we look at this trade in a minute, Tesla has a lot of risk. So if you're wrong about Tesla, you can definitely lose a decent amount of money. So to me, as a trading vehicle, it's definitely something I don't want to put a crazy amount of money in. It's a bit of play money, if you will, but I do think the reward to risk here is pretty good. So let's swing the camera around, as always, and have a look at the chart first and foremost. And what you'll see here in a second, and this is the weekly chart, so I kind of zoomed out on the charts and made it a little bit larger so you guys can see it, where you can see the perspective that I'm trying to give you. So let me kind of make it fit the screen. And what you can see, if we kind of look at the multi-year chart here, is that we've had a stock that really had a beautiful breakout when it started to break past this area that this line that I just drew. It then retested, broke below it, and retested that red line on your screen, which is the 200-week moving average. And so that was basically the March lows of this year. But the stock then began to bounce, and as you can see, it is now breaking higher out of this next diagonal line of resistance. Now, I will tell you that I think the stock could be immediate term overbought. Why? Because it's just blasted higher now for 2.5 weeks. However, given what this stock is, the beast that it is, the crazy, sort of bipolar investor and trader base, it really could continue to move, much, much higher on a short-term basis. So, personally, I'm not a massive fan of buying the stock itself. I mean, if you wanted to buy 100 shares of the stock right now is trading at $371, let's call it. So that's like $37,000 plus you'd have to spend just to buy 100 shares of stock. So what I think one could do, okay, and if you're not an options trader, you can just, kind of close your eyes right now. But I'm just trying to give you an alternative. Okay, so instead of buying the stock, for a trade, one could go ahead and buy a very simple call spread. The implied volatility in the stock is actually, to be honest with you, it's not as bad as it could be. It's risen a little bit over the past few days, but it's not so bad. So what I'm thinking here is buying the October 370 strike call. You can see that down here where my finger is, and selling against that the October 420 strike call. That's going to cost you $19.38 in debit, roughly speaking, maybe a little bit more, maybe a bit less, which is about $1,940. So instead of spending $37,000 for 100 shares, you can control 100 shares of stock until October with $1,940. Now, of course, there's time decay and all those risks that you have with options. But to me, this is a pretty decent reward to risk. Also considering that because we're using October options, if the stock were to quickly fall apart right after the over the next, let's say, few weeks or so, you are not going to lose the maximum $1,940. It's just not going to happen. That's why we're going to use October options. So again, this is an October 370 420 bull call spread costing $1,940 as I'm recording this right now here very early on Tuesday, the 19th of June. So That's the trade idea. Again, I want to say this one more time. Tesla has an extremely bipolar or polarized investor and trader base, and that causes a lot of opportunity if you're right, but really can zing you badly if you're wrong in any time frame for that matter. So that's the trade. And again, guys, let us know in the comment section down below, or send us an email to support@thesteadytrade.com where you would like to come us and what cities you'd like us to visit for the live 2.5-day seminars. These are amazing live events. It's gonna take your trading to a whole nother level. Let us know. We're getting back on the road as of August. Yeah, August. So let us know. I look forward to seeing as many as possible there, and I hope you find this trade idea here in Tesla helpful. Take care.